Hi, Bill Bodnar here, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So up on the screen, little pricing loss in mortgage-backed securities on a Thursday, short trading week, getting ready to celebrate the 4th of July holiday. Stocks soaring, 10-year note yield ticking up. Why? Jobs, jobs, jobs. ADP yesterday came out, surprising to the upside. It was a good kind of prelude into the jobs report. The jobs report's a tough one, the forecast. And we always like to leave that to the folks smarter than us, but especially in this environment when you had such steep job losses over a couple of months. And they certainly look like they're coming back in earnest. So we watched the unemployment rate tick down to 11.1. That was, a forecast of 12.3. The jobs came in at 4.8 million created when we were looking for 3. So it was just a great number. 90,000 more jobs added to the previous months. And so remember, good news is generally helpful of stocks. And weighs on interest rates, and that's what we're seeing. So taking a look at this, the chart technically, we were earlier this week, we were looking at the, pricing kind of hitting a price peak of 2020 and then backing away from it. We lost some pricing on the ADP. We're losing a little bit more pricing going into the jobs report. Now, we've recovered from the lows on a Thursday. Why? Well, it's a long weekend, right? We're still watching these negative forces of cases increasing in a bunch of states and states pulling back some of their reopenings and reinstituting some, maybe even closing beaches. So there's that happening into a long weekend. And so, what we're looking at going into next week, not much in the way of reports. It's still all about the cases that are growing and the fear in certain parts of the world and the many positive things that are happening. I mean, tons of positive stuff, including obviously the jobs report. But on top of that, is the never-ending stimulus. And what's interesting is that stocks are doing really well, nicely above 26,000. The S&P 500 well above its 200-day moving average now, which is a great technical sign. But what's nice is that stocks didn't fall in response to the good number. And why? Because they know the Fed is still there, and don't fight the Fed. Remember, all the stimulus is good for both bonds and stocks, but it's generally better for stocks. Have yourself a great weekend. Be safe out there. Bye for now.